Welcome back to the channel. Before we get into the details, if you're new here, make sure you subscribe and turn on notifications. That way, you'll stay updated with all the latest news on house prices, interest rates, and property investing. Also, don't forget to hit the like button. It really helps the video reach more people and supports the channel's growth. Thanks to everyone who does that. Now let's talk about something that might surprise a lot of you. House prices have actually gone up. I know many people won't agree with that straight away. Some of you might be thinking, how is that even possible? With everything going on, global tensions, uncertainty in employment, and rising inflation, it doesn't seem to make sense at first glance. But here's the key thing to understand. The property market doesn't react instantly. There's always a delay. The transactions we're seeing now are largely based on mortgage approvals that were secured months ago, around November and December. So what's happening today reflects decisions made in a very different economic environment. In this video, I'll walk you through how much prices have increased, why this is happening, and when we might start to see things slow down. A lot of viewers will look at their local listings and say prices are falling. And in some cases that might be true on a local level. But when we look at broader official data, the picture can be quite different. For example, the latest figures from Nationwide show that house prices rose by 0.4% in April. That's actually a fairly strong monthly increase. This follows an even bigger rise in March, which came in at 0.9%. So we've now had 2 consecutive months of solid growth. On a yearly basis, Nationwide is reporting around a 3% increase. However, when you factor in inflation, that growth is basically neutral in real terms. You could even argue that prices have slightly declined when adjusted for inflation. That said, wage growth has been higher than 3%, which did improve affordability for a while, at least before mortgage rates started climbing again. It's also important to remember that different data sources can show different trends. Nationwide's figures are based on their lending data, which includes their own brand, Virgin Money, and the Mortgage Works, their buy-to-let division. Given that they're one of the largest lenders in that space, they have a significant amount of data. But other lenders might report something different. For instance, Halifax previously showed a drop in prices when Nationwide reported an increase. Then there's the official data from the Office for National Statistics, which includes everything: cash buyers, auctions, and all lenders. But that data comes with about a 6-month delay. By the time it's released, it's often too late to influence current decisions. Another useful indicator is asking prices, like those reported by Rightmove. While not everyone agrees, asking prices can give a good sense of market sentiment. If sellers are pricing their homes higher, it suggests they're not under pressure to sell quickly. On the other hand, if someone needs a fast sale, maybe due to financial stress, they'll often list below the market to attract buyers quickly. So when asking prices rise, it usually means sellers feel confident and aren't desperate. That's been a consistent trend over the past few years. Many sellers have entered the market with strong expectations, and even if they didn't get immediate offers, they didn't rush to reduce prices significantly. Now, looking ahead, Nationwide expects the market to cool down. That doesn't necessarily mean prices will fall, but transaction volumes are likely to decrease. One of the main reasons is the recent increase in mortgage rates, which jumped after global tensions escalated. As rates rose, many buyers decided to wait and see what happens next. Uncertainty plays a big role here. Buyers are thinking, if I wait a bit longer, could rates drop again? And that hesitation slows down the market. On a more positive note, some lenders have already started reducing their rates. The Bank of England recently held its base rate steady, even though lenders had previously increased rates based on swap rates. The central bank also outlined possible future scenarios. In a worst-case situation, like sustained high oil prices, there could be several rate hikes. But in a more stable scenario, rates could remain unchanged, which might allow mortgage rates to ease again. In fact, we're already seeing signs of that, with some lenders offering rates below 4%. If this trend continues, it could encourage more buyers to return to the market. So to sum it up, house prices have risen for 2 months in a row, giving the market a bit of a cushion going forward. Even if prices dip later in 2026, there's now some buffer built in from these recent gains. What do you think will happen by the end of the year? Will prices finish higher, stay flat, or start to fall? Let me know your thoughts in the comments. And as always, don't forget to like, subscribe, and check out the other videos on the channel.